What's up traders, welcome back to my YouTube channel. Once again, we're going to be having a quick review on the price action that we had on Friday, implementing fair value gaps, buy side liquidity, sell side liquidity, mohawks, and all the concepts I've really been trying to explain to you. Without further ado, let's delve right in. So this is Friday's price action here. On Friday, we had this inefficiency here in form of CB 4 hours bearish fair value gap. So let's go to the 1 hour time frame to have more information. So just here, you see how in this 1 hour time frame, this bearish fair value gap, it's really big, but we want to be considering the range of this fair value gap in the 4 hours time frame. This fair value gap here we have right here. So in the 4 hours time frame here, I want you to notice how at this point here, this is just a week, right? So notice I've explained one kind of mohawk. I've not explained the fair value kind of mohawk. So this mohawk right here is just the fair value gap kind of mohawk, whereby we have the body trade below the midpoint of the fair value gap and even inside the fair value gap, then the week can trade outside of it. So in the 1 hour time frame, we had this 1 hour bearish fair value gap, and this 1 hour bearish fair value gap here was just right in the time I wanted to take my execution, which is 9:30 New York opening bell, within that time window. So this fair value gap here was just right there. So I anticipated to see a sales from here. So this sell side liquidity is from the 5-minute time frame. It's going to really be clearer once we get to the 5-minute time frame. So just here we have the sell side liquidity, the bearish fair value gap, and also we had this 15-minute bearish fair value gap here. Let me drag it a little bit out. This is a bearish fair value gap here, and this sell side liquidity, which is going to be more obvious once we get to the 5-minute time frame. So just here I was anticipating a sell at this point here. You see the 9:30 at this point here, but this candlestick closing above the 15-minute bearish fair value gap and also above the 1 hour bearish fair value gap invalidates any sell. And you see how all this happens after taking a sell side liquidity. And just in the 5-minute time frame, you see how obvious the sell side liquidity is here. And this reversal here we had at this point, breaking through this 15-minute bearish fair value gap, which you would normally anticipate or expect it to act as a resistance. You see how it broke through it. And if you go to the higher time frame, this is just a mohawk. Now when I'm talking about mohawk, I'm referring to that this point here is just a wick in the higher time frame. A mohawk is actually a signature, a trading signature, whereby you can actually use it to anticipate or predict price direction, where the strength is going to be. So in the 4 hours time frame, let's look at this point here in the 4 hours time frame. So now you see how this here is just a week in this time frame. So having the body push seriously here to the upside, that's showing you a bullish signature that the buy that the market is currently in a buyer's program. So you're anticipating to get in bullish setups than bearish setups. So in this case, for me, I did not trust this really much because we did not have a bullish fair value gap to back it up, even though we had this inefficiency here in form of volume imbalance and the rest, whereby we don't have this candlestick filling all this space. We just have wicks trading through it, and there is no candlestick at this point here. we had that volume imbalance. That's a volume imbalance. We can see it as that, but just this signature here, you can know that it is literally going to trade to this 4 hours bearish fair value gap. Then see the point here whereby it's a mohawk. And for those of you looking at CRT, so you'll be seeing that it has taken this candlestick low, right? And the reversal, you'll be looking for entry, fair value gap, bullish fair value gap as entry in the lower time frame. And also you'll be seeing this candlestick here, the range of this candlestick. As CRT. So you see how everything needs to align with ICT's concept, right? So we're seeing this range here as CRT, and probably you want to get in anywhere around here in the lower time frame, whereby you can find an order block and or a bullish fair value gap to use for your entry, right? So literally everything needs to align with your understanding of ICT's concept, right, to work this out perfectly. Now in the 1 minute time frame, let's just look at how we would have engaged from all this information here. So having that this is a mohawk whereby sell side liquidity have been taken and we have willingness for price to trade higher, notice that the only time we had a fair value gap was just around this point. Around here we don't have any obvious fair value gap. See, this is the 9:30 opening. At this point, this is the 9:30 opening here. Though this is the time window I'm really interested in. So this year, just after taking the sell side liquidity, you see that we don't have any bullish fair value gap. So what do? We wait because we really want to engage with a bullish fair value gap. Now, even after taking this trading back to this 15-minute bearish fair value gap, you see how it did not displace lower to give us a bearish fair value gap. When I'm saying displace lower, I mean something like this: displace lower to give us a bearish fair value gap for entry, so we can trust that it is going for the sell side liquidity. But in this case, it reversed from this point, and now this becomes a wick in the higher time frame, just as I've shown you. And all this here now gives you bullish fair value gap whereby you would think to engage. But this is already over exaggerated for me because it has taken a buy side liquidity, which is here, right? But I can still look at getting in if I'm having the 4 hours bearish fair value gap as my drawn liquidity, which I did an execution on this here. I took a bias from here to this point here. It retraced and continued higher, bullish fair value gap. So once you have all this, that it has disrespected the 1 hour bearish fair value gap now, and it is rejecting of that, showing you willingness that it wants to go higher. You see how it creates bullish fair value gap in that direction, knowing that the bearish fair value gap is not strong enough to hold price. So you can expect it to create bullish fair value gaps for you to trade with, right? Now you also notice how the 1 hour bearish fair value gap, let me bring that out, it will be clearer. Notice how the 1 hour bearish fair value gap becomes an inversion fair value gap. Let me change the color for this now so you see. So you notice how this 1 hour bearish fair value gap becomes an inversion fair value gap. Reason being that the candlestick has traded above it. Even in the higher time frame, you have the body of the candlestick close above this bearish fair value gap. So you trust that this bearish fair value gap is not going to hold anymore as a bearish fair value gap, but rather it's going to hold as an inversion fair value gap, acting as support for price to continue higher, even to the midpoint of this 4 hours bearish fair value gap. Clear, easy, right? So now getting to the 4 hours bearish fair value gap. One tip I want you to go home with today in this video is that once you are in a bearish fair value gap, to make everything really easy for you, you can just anticipate a sell setup in your lower time frame, with the anticipation in the back of your mind that it's going to reject all that fair value gap, the bearish fair value gap from the higher time frame. For example, if I pick a 1 hour bearish fair value gap, I can come to my 1 minute time frame and anticipate that I'm looking for a sell. Anticipate a sell setup. So how is my sell setup going to look like? So I would really be interested in, let's say, this is a 4 hours fair value gap now. This is a 4 hours bearish fair value gap. If I'm anticipating a sell, though this is not an ideal setup, note. So if I'm anticipating a sell, I want to see a serious displacement to the downside, then price retracing back to any of these PDRS, the bearish fair value gap, so I can take an entry to any closest sell side liquidity. Just here, in this case, you see this is sell side liquidity, and you see how price traded to it here. So that would be how my setup will look like. But in this case, it did not really trade as I would want to see it do, trade to this bearish fair value gap here. So let's assume we still wait for it to come back to that 4 hours bearish fair value gap, right? If it comes back, you want to see it trade something like this. Take out the buy side liquidity and drop lower, and you would trust that to give you a sell trade, right? You just want to see a willingness in the direction of the fair value gap you marked in the higher time frame. So sell side liquidity here, sell side liquidity, you'll be interested in seeing that because you have a bearish fair value gap from the higher time frame. So once it retraces to a bearish fair value gap here, after this serious displacement to the downside, you know we are bearish because we marked out the 4 hours bearish fair value gap. It has taken a buy side liquidity here. This becomes a mohawk. When I'm pointing out mohawk like this, I'm just trying to say that in the higher time frame, this is just a wick here. Alright, so let me show you in the 1 hour time frame that that's just a wick. So this is the mohawk here, right? This is the mohawk, and you've seen that this is just a wick in the 1 hour time frame. Now 1 minute. So just after seeing that it has taken a buy side liquidity here, you see how it displaces lower and retraces back to a bearish fair value gap. If you want to take this bearish fair value gap here, it's not still wrong. If you want to take this bearish fair value gap, you are not wrong, but you need to keep your stop loss above a swing high. So to even be more safer, you can still wait for it to at least retrace back to probably this point here, which still an order block at this point here. Let's say this, an order block here, retrace back to this point, and you can take your entry. So that's a bearish order block. Then we have this bearish fair value gap here. You can still get another entry here. Bearish fair value gap. Now your target would be a sell side liquidity, just like this. Keep it here. So then you can keep it at this high. Now this is a swing high. This is a swing high here. You can keep your stop loss targeting this right here. Okay, and also for the buys, this is how it will look like. You have two options because it has swept the sell side liquidity, the 5-minute sell side liquidity, and you've seen willingness for it to trade higher. You can use this bullish fair value gap or this particular one. So I would get in my lowest position here, expecting it to still drop lower to this bullish fair value gap. So I will get in my lowest risk here. Then I will target the midpoint of this 4 hours bearish fair value gap. That would be my target. And my stop would be below this low, but I prefer keeping it below this fair value gap. So I have the execution video which I'm going to post in my shorts, and I'll link it up with this review here. So this is it for today's review. If you found this insightful, like this video and subscribe to the YouTube channel, as we are building a strong community of traders that trades with sound logic as it is concept. Thank you. Till next review.